All right, thank y'all for joining. I was having technical difficulties, but give us a few moments. We're still trying to get everyone situated over here, but we have takeaway tax with us today. Great information for you guys, but please stay tuned. All right, guys, we'll be getting started in 2 minutes. Just waiting for you all to all get on Zoom and make it to the office. We did have 2 or 3 people that said they're on their way to the office. But thank y'all for joining. We'll be starting soon.
Have you started?
She do my taxes.
She do your taxes already?
Yeah.
Okay, good. Good. She's your best friend, so you talk to her every day.
Yeah.
But how often do you talk about finance?
Once a year.
Sometimes having your financial person right on your hip is a good and bad thing. It's a good thing because I can trust you.
Oh yeah, I can trust her.
Yeah.
She just asks sometimes. She be like, "You need to do this." I don't even want to.
You don't listen to
She's the whole accountable type of friend.
I love it. I love it.
All right, guys, we're gonna go ahead and get started. So we have Miss Yvonne Cobb
Ivanka.
with takeaway tags. Great information for you guys. So I'm gonna turn it over to her.
All right. Afternoon, ladies and gentlemen. Thank you guys for coming out. I'm hoping your bellies got full a little bit from the lunch that we served, as well as if you're at home, you guys are full as well. My name is Yvonne Cobb. The company that I am talking to you guys through today and founder of is Takeaway Tax. I like to say the understanding is in the name. It's takeaway tax, right? So we're doing taxes, we're formulating, strategizing, and helping you guys improve your tax journeys, but the right way. Everybody can kind of tell you things that you could be doing, but it doesn't necessarily mean it is always the right thing, right? And I felt like this was a great opportunity to tie in with you guys, and I'll let her press play and introduce you guys to the home of the tech and touch. What we recognize is technology is a part of our space, and we all have to adopt it somehow inside of our business models. And here we'll take away what we've decided to do is use AI models to just be an expansion of us, not taking away the human element, but how can we function with the technology to really help us grow, gain, and work flows out through our businesses. So without further ado, all right? All right. Let's see if she'll play on here. All right. Let's see. Is it not playing one?
It's just going to the slide.
No problem. That means y'all want me. No problem. All right. So we were not prepared for the online people, right? But that's okay. I want you to follow the slides as they go through. Let's tie it back. We don't want to get ahead. We're going to talk about how navigating track regulations and the changes, right? We're going to watch the old. We're going to come in with the new. We're going to talk through what you guys are going to deal with today, which is giving you guys some great scenarios about how this affects you guys as real estate agents. We're going to talk about tax planning. How many of you guys are already talking about tax planning? Right, getting ahead of the game, right? Some of you guys are older real estate agents and you've worked through different parts of your commissions. You've kind of, learned a way to live your lifestyle based off of how you're getting paid. But in the tax planning space for us, I'll talk a little bit further down the road, but it is really crucial to get in front of your tax liabilities as quickly as you can. Biggest threat is once you're doing taxes, most of us are doing it first part of the year, January through April. But what are you completing when you're doing those taxes? Can anybody answer that for me? What are you completing in the room? Maybe? You're talking about last year.
Oh,
right?
Yeah.
Yeah. So months ago, right? So like the idea is when taxes are normally due, the bigger threat is they're talking about something that happened a year ago in your life. So it's really hard to try to figure out or remember what happened with this transaction. How did I regulate this? How did I keep up with the receipts? Will I have all the data that I need to give to my accountant or my tax professional in order to get the best approach? I love her, you. All right, guys. And then we're going to talk about a program that we created about 4 years ago that's called TAC Cares. So you'll hear that often when I talk. And TAC Cares is just takeaway tax cares, right? So it's our hug to our clients, extending ourselves past prep. Because our biggest threat is that preparation has to come. Everybody has to prepare taxes. It's just it's been going on since the 1800s. right? Now, how do we get ahead of it? Because everybody talks about it, but no one tells them exactly what to do in order to get ahead. So we're gonna roll through that. We're gonna also share with you guys a live success story. Like, how could I come in here and tell you about this opportunity? What's going on with Trek if you don't have real live people who have actually been through it? That's worked through regulation, that set these things up. And we want to make sure that you guys and the guys online get an opportunity to kind of see that person talk about their journey, right? And then lastly, Q&A. I want to hear from you guys. I want you guys to ask me any question that you need to. I am a certified public accountant. I'll talk about me in a little bit, but I want you guys to ask the questions. And then from what you hear today, what is the offer that we're offering you in the room so that you guys can feel more equipped when you walk out, right? Now, can you guys hear me online? Can we hear them by chance to unmute them?
They hear us?
They do?
Yeah.
Yes, can somebody?
Yes.
Yeah, they say yes.
We're good? All right. All right. So let's talk about old Shrek regulations, right? So ideally, me being a CPA, 20+ years of experience in the tax industry, I found to take away tax as a more concierge approach to taxation because everybody was going to H&R Block in Jackson. Some were TurboTaxing at home with their 1099s and kind of figuring it out. And I know that people wanted more convenience when it came to regulating their tax experiences. But what we're dealing with now is the old way that Trek allowed you guys to show your income and your commissions. So ideally, we all in the room know what Trek does and what they regulate. But as of those past years, sales agents frequently inquired that you had to use your brokers, which is most of us now are still under brokership in order to be looked at as a separate entity, right? Because all of your commissions that you make is approached and reported on a 1099. But the biggest threat is that 1099 belongs to who? The licensed agent, right? The 1099 comes in your name, in your social, right? So what that does to you is that sticker shock. After you evaluate all of your collections over the months, and you look at this big ticket of 1099 that says $180,000 of commissioned income, and you're looking around and you're saying to yourself, this is a tax bill that I am scared of, right? This is a tax bill that I'm scared of. So the other regulations with the old Trek rule is that the business entity that accepts the compensation on behalf of the license holder, which means your broker, must be licensed as a broker in order to be perceived as an entity. So your brokers are business owners, right? So the transactions that they prepare for you guys are assigned to their business and they are paying you guys as independent contractors underneath. That was the old regulated way. And then your tax professional, had to work with you, the real estate agent, and figure out where did we spend all this money? Like, where did the money go, right? Because we've got a bigger ticket and we don't know how to segment the actual expenses against the income that came in and where it was going to. So we had to reclassify a lot of your money, right? And what happens with that is, what would be your deal when you had, what's one of your biggest commission years? If I can ask some of the older guys in the room.
Biggest commission years?
Biggest commission year,
2021.
2021. What was that ticket? Do you mind sharing it? No.
All
All right. So just say it was 180K,
okay.
right? Just say it was that. Your goal, even with your tax professional, is to what? Lower the tax liabilities,
Yeah.
right? My goal is, I hate to tell my client, based off of $180,000 on the commission space, you're gonna have to pay two people. You're gonna have to pay IRS, right? And now you're gonna also have to pay what your business owed under your own independent blanket. So what ends up happening is that word that some people speak of, which is double taxation. Right? You're being taxed as a business owner based off of what you have left from the business. And then you're also being taxed as a person right? So you got your personal taxation, which can be anywhere between 10% and 30%. And then you also have this sticky shock of 15%. That's just for the business. But you, and the way you're set up as a contractor, have to eat that all under your personal liabilities, right? So the goal every time with your professional is, I'm gonna lower this thing as much as I can, and you start to look very poor on me. Right?
Right, yeah.
Right? So what does that mean for the old way? The old way didn't really allow us to have a lot of flexibility, right? We have business entities. Most of us have, you have a business entity, LLC?
Yeah.
You have LLCs, right? How often are you using them? Being the fact that, yes, you probably are segmenting some of your expenses there, but is the revenue really being identified in that bucket?
I don't think so.
So no, when I say identified, I mean, you actually have your commission pays going directly to your business accounts,
They don't.
right? So that you absorb, so now you're absorbing all that personal liability, when technically you're looked at as a disregarded entity, as a contractor. So basically IRS is saying, you didn't pay into your Social Security and Medicaid, so we're gonna take it. Right? And it's gonna be based off of what you have left. So me as a professional, I'm trying to lower your bill so low, then when you get to the AGI, what are you guys gonna be able to buy?
You gotta tell them what the AGI is.
I'm talking professionals that have done taxes for years. Adjusted gross income, right? So the income you have left, I'm sorry, you're correct. The income that you have left after deductions is considered your adjusted gross, right? So you have these conversations every day with your clients, right? Because that is the number that you take to the lenders to say if they qualify for a certain amount of house. Well, how many homes do you know? How many opportunities do you want to explore the same things that you provide for your home customers? Right? With new track regulation, we got changed, guys. Now, I don't know how long it took them to get there and how many people had to lobby to get this done, but it exists now. With new laws, you now can register your LLCs and corporations directly to TREC. Right? So you have an account already with TREC. And you can now take your LLC and put that entity attachment to it, right? Now, what does that open up for you? Other spaces is the LLC or S Corp. Do people know what S Corp means? I can educate them a little bit. So it's an LLC, yeah, that you have now as IRS to classify as a single corporation, single member, right? So, hey, I'm a one person owner, but I want to be taxed like a corporation. So it's an extra registration that happens after you establish your LLC, right? So, but either way, you actually have to own 51% of your business. So what that means to you is you can also have a partnership, husband and wives, brothers and other outside partners, but you, the real estate agent, has to own 51% of that LLC, yeah, or partnership, right? As well as you have, the registered entity is solely for collecting commissions. Now, that's the other kicker. The business entity that you are assigning to TREC can only pull in your commissions. That is what it's built out for. And that now, not saying your entity can't own another entity in real estate that does building and development and all those things. But the one LLC that you assign has to only be handling the commissions that you're getting paid out. Now, what that means to you is there's no separate broker and your EOS insurance is required to register the entity. So E&O insurance, you wanna know what that means? Yeah, right, so you just add that to your business. So it's no different than you drive your car. In order to get on the road, yes, you need a driver's license, but you also need insurance, right? So your business will need that EO insurance in order to be registered with TREC. What does that mean to me? Let's meet Tarjay, right? What's nothing without an example, right? So meeting Tarjay on this scenario, she sells about 20 transactions a year, right? Averaging, most homes are now averaging what? You guys are the experts. 250, 400, 300? 300? Can I start at 400? Okay. So let's say she's earned commissions at 180, right? Now, what her personal context is, Tarjay doesn't have a family yet, right? She's new, she's getting into space, or she just has decided that family is maybe down the road. And then this is her only source of income, right? She's 100% in her business. So no significant itemized deductions. So she's not itemized, she's just dealing with the standard deduction that IRS gives, and she doesn't have any other credits coming from anywhere else. It's just the commissions base, right? Before adding any expenses, what do you think her amount that she would have to pay in taxes?
15,000.
15,000, right? On 180, what do you think?
20.
20,000, 25? Any other guesses?
No.
Any guesses online? See if they can open up and let us know. Can they let us know online? Any guesses online? They got a chat room.
Maybe like 30,000.
About 30,000? We're getting close. Keep on.
45. 39.
Keep going.
60.
Wow, 50,000.
$58,718
Wow.
is her tax liability, right? And here's the breakdown. She has self-employment of 25,000. Remember I told you that double taxation space, right? On 180,000 left in her business, right? Before deductions. Now she can have deductions, we can bring this down, but we're just talking, if you flat throw the numbers in and you can't show any other deductions. This is where she sits. She sits owing $25,084 based off of her self-employment taxes. That's just the 15% that they want for the 180, because you as a sole proprietor owe that in self-employment taxes. Plus federal income. Now we're gonna take your income in and we're gonna say because you earned 180 and the standard deduction for a single person was only 14,000, you basically still had a 80K or above left taxable. Your federal liability is 33.
Wow.
Right? So if you add these two up, this is how you get to $58,718. And most of us aren't putting up no quarterly money. Right? Are we throwing money in? We're surviving. We're living, right? As that money comes in, it's allocated in some particular space. But the idea is this was her prior to this old trend ruling. This is if you take advantage of the new regulations. New regulations, can we move us? Right? All right. So with the new scenario, she decided to create her business and form an S corp. Right? Because she had a conversation with an accountant or she had a conversation with her tax professional early. Right? SREC regulations started in the new space January 14th of this year. This is the most powerful part of why I am here talking to you today, is we still got time, y'all. We still have time to change the narrative in 24. This started January 14th of this year. What this will allow her to do is form her S schedule, and now her personal liability stayed the same, but look at the difference. The one thing the S corp takes away is the self-employment taxes, right? That 25,000 was based off of what she owed as self-employment taxes. What an S corp does for you is it allows the money that you earn in your business to be considered passive or ordinary income, which means it's no different than a W-2. It's no different than a 1099 or like if you're getting retirement or some other income, what you're getting on your gains and losses based off of any investment portfolios. It gets you what's called K1. And some of you probably have seen that with some of your clients having K1s because they're in partnerships or they're part of other S schedules, right? They have some type of ownership in those businesses. Now, this is opportunity too. If you don't decide to go LLC S schedule, you're still having to eat the self-employment because it's still looked at as a contractual obligation, and your business is not considered a business in the IRS until you're a C corp, an S corp, partnership, or nonprofit. So even running to get your LLC doesn't hide you from taxation. You have to structure it the way that you want to, and then we're gonna talk about other benefits of an actual Schedule C. Go into the next slides. First thing I want you guys to always understand is I want you to walk out of here with key strategies. What can I do on my own, right? To try to kick the blunt of this happening. One is tax planning. It's crucial. If you've been on Instagram, if you talk your finances, everybody is talking about tax planning, right? Because it's no different than wealth planning, right? That whole jargon in years, we've heard people, how much do you need to retire? And then they work backwards. They say you need $1 million. This is how old are you? Then they work the numbers backwards, right? No different than taxes. Taxes can be looked at the same way. You can basically take the real estate commissions you have coming or the ones you've already earned and strategize what buckets I can place this in. The IRS has already given me an allowance for, right? They give you allowance in your personal space. They give you allowances in your business. They give you allowance in contributions. They give you allowance in doing something with your homes, buying vehicles. They give you certain rights. When these rules change every year, right? But you need someone that understands those rules. So the tax plan is, let's take the rules and let's take what they've given us and let's use those buckets based off of what you want to do, where you want to be as an individual or a business owner. Let's talk about one big opportunity is optimizing the structure, right? One, create the business. Trek now allows you to have that adoption. Now let's create the business model to what you want. We talked about S schedules. Let's give you some more advantages of it. One, it takes away the self-employment tax. Two, you can go from being an actual business owner to an employee of your own business, which means most of us are getting commissions and that's cash money, but we're not saving for retirement. We're trying to live today, right? But with the S schedule, you can go from having to give any other lender a 1099 or all of your bank statements to giving them a pay stub. Because you're not only an owner, but you are also an employee of the business, which means you can reroute your commissions and have it pay into IRS the way that you would want to. You can't do that as just a regular LLC. Partnerships, C Corps, S Corps are the only one where the owner that has percentage can then be an employee, right? Other structural opportunities is more deductions. You can write off more. Mr. Davis can tell you that, right? You can write off a lot more. Depreciation, amortization. You can add your children. You can facilitate different things within your business structure that just allows for more write-off. And there is a lower possibility of audit. How many times do you really see a corporation being audited? So an audit is when IRS comes in and they examine your returns, right? So they're saying, hey, I'm questioning what you're writing off, right? How can you prove it, right? And a lot of us do a lot of commingling. We do a little bit in our personal side and do a little bit over here in the business. And then if you're sitting in front of an auditor, they want to streamline. They want to say, if you're a business, then I shouldn't see anything on your personal side. Everything that you said that you wanted to write off should all reflect on the business schedule, profit and loss, in your bank statements. I just didn't see anything personal. Only thing personal I want to see is your investment as an owner inside of your business, right? So getting with your tax professional and walking through what that looks like for you is a part of planning, right? Second, leveraging your discounts in your deductions, right? Most of us, if not everyone in this room, uses their vehicle to everywhere, right? But are you really using all the actual deductions that you can use on your automobile? Right? You're putting gas in it. You're changing oil, tires, inspections, right? You're using mileage. Now, I'll tell you, mileage is a hard one because IRS wants to know where you started, where you stopped, and what you were doing in between. What did you put that house for? What was that doing? So it's a lot of back end paperwork that they can respond on mileage. And the biggest part is they're paying 65 cents per mile. So of course, they want to know that you're not just saying, I went to the store around the corner and I'm gonna write this off because I'm in my business. No, what did you go to the store for? How did you conduct business going to the store? So I tell my clients, don't revert so much to mileage, use actual expense. Use what you're paying on your leases. Use what you're paying on your gas and your fuel. You know, be smart about depreciation. The same car you drive, you're probably not gonna keep that thing more than 4 or 5 years, right? But you could be getting credit based off of how many years you have your car. That's a part of tax planning. I'm gonna depreciate my car. I'm gonna go buy a car this year and start building depreciation. Electric cars. Huge. Fuel cell vehicles, you know, all of us want to update, but there are so many law factors that sit behind certain vehicles, but it's not up to you guys to know everything. That's what you go to the professional for, right? And how you plan that out would make a boatload of difference. And lastly, if there's a need, quarterly tax payments. We all forget about that. A lot of times when you're in your own independent space, you can actually fund your own liabilities early. A lot of rule of thumb, I've had a lot of people come to me where they're older CPAs, had them put in 15%, that 15% rule, based off of your self-employment tax, they would have them put that on gross. So if you got a deal and your deal was $30,000, they would tell you to put 15% of the 30,000 into the quarterly payment to IRS. It's a free savings account. So if you're interested in a free savings account that you can work to get back at the end or not have to bother with the payout because you've already paid it out front, it's outside of your realm. Quarterly payments is a route for you, right? Put the money up, no different than the W-2. But as an S corp, you can relieve yourself from that, right? Because I can actually payroll myself and let them take out what I choose to say I make as a salary out of the commissions. So getting with your tax professional, things like your home office, your vehicle use, maximizing your marketing costs. I mean, gosh, if you guys are not in the industry that is set around marketing costs, I don't know what, right? You pay for your leads, you go out and market to networking events, you're doing this, you're doing that to get in front of clients. Yeah, all the things you gotta buy, you know, your clothes, right? Y'all gotta look good. Y'all. This is one place where you gotta put it on thick, right? To impress your clients, right? If you're writing it off in the right space, then your whole lifestyle can be a write-off. Because y'all are in a lifestyle industry. Let it be quiet is being kept, right? The house, the framework that comes with that. So just make sure that you're taking effective write-off strategies with what's available. And ensure that they're within the compliance laws, and effective planning really could stabilize you guys. And the biggest opportunity with the planning, and I'll talk through it, is now that TREC is allowing you guys to use the entity, that looks like now you are a business owner, right? You're not just someone that makes commissions. You're an actual business owner and you're facilitating your growth, right? You're using the money you earn in order to facilitate your lifestyle the right way. And you're not poor on paper anymore. Can we clap for not being poor on paper anymore, right? I want y'all to buy the same homes that, if not more, that you guys are showing to other people. We want you in those better positions. And of course, it gets hard when you've got to only show commission money the way that it's set up. All right. Let's talk through the power of tax peers. Now, for me, I understood that as tax professionals, we needed to give you guys more conversation. And remember, that was one of the first things I asked you. Your tax professional that's close to you is great. Use them for what they, and if not, challenge them to go find out. If they do not know, it's everything, because the laws change so much, they need to be educated. So with the tax cures opportunity, I felt that having the conversations with my clients were key to getting them ahead of the curve. So what I implemented was mid-year tax assessments. Now, remember what I said when we first started? I said, when you're filing taxes for that current year, what are you filing for? Last year. Now, you may file your taxes by April when they're due. You've already lived 4 months of your life in the new year before you filed from last year, which means the same habits and things you were doing last year, you've already started continuing to do that 4 months down the line. So what I challenge my clients with is I have a subscription model, right? Everybody don't want to pay your accountants every month. I don't want you in my retainer. That's not the way my workflow works, right? So I created a quarterly subscription, right? Where we can sit down and do what I call a mid-year assessment. You give me all your commissions. You give me all the income that's come in the first 6 months of the year, right? And I'm gonna take that forecast and I'm gonna say, if you keep to your percentages and maybe go up 30, if not double, this is where you can end up before the end of the year. Right now, based off of how you're set up, let's start planning on how to move over the next 6 months. 6 months can change your life. 3 months can change your life and how you view your money and how you make it move, right? We also offer within the program bi-monthly check-ins. Somebody got to check up on y'all because I can give you a big of stuff to do, right? Open this, save this, do this. And then you're gonna get in your regular lifestyles and you're not gonna do a portion of what I asked of you to do. So someone's gotta check in on you and let's be accountable together. And you wanna know the big reason why I hold my teams accountable, my clients? Because I talk to them about their money like it's my money. I'm like, girl, they owe us this. Like, we need to go back and get that. Like, that's the type of conversations I have with my clients, right? Because I feel away. Because the wealthy that's wealthier than us ain't paying nothing.
Correct.
Why are they in that position? Because they plan it out. They understand that the plan has to happen. They're planning 2, 3, 4 years down the line. I don't want to even go that far because life be life and I don't know what's going to happen in 2 years. So we plan year by year, right? Because one, it gets you closer to your ultimate goal, but then things change. Somebody has a baby, they lose a job, commissions go down. How do we get you where you're comfortable? And now you're building a business. Now, the other spectrum is I can not only plan for you independently, I can plan for your business. Right? So is there a W-2 in our makings? Do we need to put money in a different vehicle? Do we need to invest in another vehicle? What does that look like? How do we move money in the way that it moves towards us? So with that, you also get discounts, a concierge person. I have team members that you'll get me, but then you'll also get my team. Those 2 young ladies right there, they communicate with my clients very well. They get to know them by hand, right? Because it takes a community, right, to build out, as well as real-time updates. So if I'm talking to you in real time and you told me, hey, I need to buy a car because my car's being fixed, right? Let's have a talk. What kind of car you want to buy? And who's buying it? Are you or is the business buying this car? Right? Because I want to write off everything. I don't just want to write off depreciation. I want to write off a car note. Like we're taking on a car note now, right? But I've got to get it in a right position. Okay, you want to buy the car? Give me 3 months. I need your bank statements to reflect that we can buy a car because if I take you to the dealer's going to want to know that you've got enough cash flow. Speaking on cash flow, right? The LLCs in the room that are not taking in the money on that side, you guys are not showing your cash flow. Right? It's not formulating through the business. Look, I told my clients, I don't care what you do with the money, you're gonna spend it anyway. Right? It's gonna get spent, right? But let's segregate how it's spent so that we can take the right write-offs. Right? And if it sits in the bank statement, if it sits on the P&L, I can fight with you. For IRS, I will stand flat-footed and talk right to that auditor and be like, I got the formula, give her the write-off, we're not doing this. But I can't fight with you when it's in your personal space and I barely got a receipt, and she's looking at me like, this is not, it's not in the right format. I can't give it to you. Then I gotta negotiate. I gotta, what can you give to us, I have to have that conversation, but the idea with it is you get customization based off of what you want to do. You want to have a baby, you want to buy a house, you want to open up more streamlined income with your businesses. I want to walk through that journey with you. But telling me, and then you going off on your own, that may not be the outcome, right? So the idea with that is Tech Cares was built out to care about how you move, right? Now, there's no way that I could walk through this opportunity without a success story, right? Right? I could talk all day and give you all the opportunity in the room, but the real-time success stories are what people resonate with, right? I've got one young lady that came to me last year. She and her husband both earned about $400,000 together, with $270 of that being her in commissions.
You go, girl.
Yes, this baby would have been the 2 or 3 brokers. She'd have moved around a little bit, right? But all them 1099s came in, G, and we added them up. And there were over 200,000. So her husband almost makes 200 by himself, but he's a W-2. I go to work, give him a check, come home, I'm good. But the sad part about it was I had to tell him that after he had already given IRS 50K, they wanted 50 more.
Wow.
It was on his way. So I had $200,000 of conviction. Now think about you guys sitting in that seat. You come in with your 1099, throw it on the table, tell your husband, y'all gonna have to go figure that out. Because he has a W-2 job, you gotta tell your wife, ugh. I'm gonna have to write all this out, you know what I'm saying? And she looking at her like, my W-2 ain't all, I'm halfway there. But going back to that, we strategized and we got into planning, and guess how many months we had to do it before the end of the year? 6 months. 2 months. 4, 3.
3 months.
3 months. So she was already in her business. Now this is pre-track. This is pre-track, right? So I had to get in my bag, right? I had to figure it out more, right? And come up with some solutions. So 1, we created the business. 2, we escorted it, right? I ran 2 payrolls for her before the end of the year. So now we got a W-2. I reconfigured some of the money. Before we knew she was coming, she already kind of told me what was coming, and she had money put away because her other CPA had already told her to put over $40,000 of commissions inside of her estimated tax, her quarterlies. And I was like, he told you to put how much? I felt away. So you didn't already get IRS 13. So 80 up there, they still 54. I'm confused. So after we reworked the numbers, and she did what I told her to do. She followed. She signed up for Tech Care. She got her assessment. I sat on the phone with both of them because I feel like both of them need to be in the room, right? I never have a solo conversation. If there's a second part of you, we both need to talk because the second part is still spending money, right? I had her change how her husband was spending money. He's an electrician. He's out in the field all day. But because he's a W-2 worker, he can't write off nothing. He's in his own truck and he's not on a company truck, but they won't let him write it off and they're not giving him per diem, right? So I said, listen, give him the business debit card. I need him to write off, I need him to pay for his gas, right? I need him to, when he gets ready to eat, use the debit card. And she didn't fret about it. She was like, okay. Got his own little debit, and he's an employee of the business. Yes.
I guess he.
He's right on 6 off, but the thing to take home is I got her back the 30K that she put in plus 15,000 of his
Amen.
when we were done. They ended up showing an AGI from 400 down to 275. And we walked away with a $44,000 tax refund. Right, and that's in real time. But one of my favorites, I'm gonna have her come up and she's gonna share with you her journey and how she has come up in the industry herself. With further ado, I've got Peaches Brown of Peaches Brown Realty.
Peaches.
I don't want to take up too much of your time. I just want to do what she has asked me to do. Just come. I came all the way from San Antonio. Got a hard this morning to
Appreciate
make sure
that.
I was here just because I believed in Yvonne Cobb. Before I say anything about me, she's not going to tell you the beast that she is. She's not going to tell you that she's been in Forbes magazine. She's not going to tell you she gets paid to travel and talk about finances, that she is that teacher and educator. She's very passionate about it. So just want to let you know she's coming from a place of 20 years, but she does it out of a place of love. I like her because she's been doing my taxes about 5 years now. And so that's what I just want to share with you, because I thought I was the guru. I did my own taxes, TurboTax is my friend. Because of that, I just wanted to come share an experience when you're like me. Before I got into real estate, I made about $50,000 a year, and I wasn't gonna pay nobody a couple of $100 to do my taxes. Right? But nobody tells you that TurboTax is designed to give you just what is the minimum. And what I found out in this business, thanks to her, is that every year the economy changes, that you might get tax credits that's just available for this year, of course. And if they changed it, it probably affected you too.
Right.
But then it hit the masses. And so, but TurboTax ain't gonna go ask you all that. TurboTax gonna give you the basics every year, same questions. Every year, same questions. TurboTax never asked me if I ever had COVID. But I'm just explaining that sometimes, just like it's real estate agents, I am a real estate agent for 6 years. You hire me for the value that I bring. You hire, especially in this NAR settlement, you really have to explain your value. You bring me for the partners that I bring with me, for my know-how, for my negotiation skills, and I'm able to look at a big picture that you can't see because you're not in the business. So whether you bought a house before or not, you're still not the professional. We have to walk in like we are the professional, which is why I pay her. I don't want to know. I don't care. I just know when I did my taxes, this is how much I paid. When she did her taxes, this is how much she paid. So she had a couple of questions that she wanted me to address so you can kind of know what she can do for your business. I have been in real estate for 6 years. In 6 years, I started doing very well off the top. I now currently sell about 50 to 70 houses a year. I no longer do it. I do have a team of 2. I don't want a big team. I just want enough people and then I cherry pick my agents. They were my friends and family that went to get licensed just to work with me because I wanted to keep it in the family. So I no longer want to be in the field. They go out in the field and I just pull the leads or either my referral business, because I get a lot of referral business. I send it out to them so we can keep it in the friends and family. So my sister-in-law and my best friend got agents. I got them and they're doing their thing. So with that, what was your tax story before you used to take away tax? This is one of the questions she wanted me to address. Again, I did my own taxes. I thought I knew it all. You go online, you go to the school of YouTube or whatever, you did your taxes trying to save $200. They want to go to H&R Block or go to a CPA. I thought that was money that I could do myself. With that, I started my real estate business. My first year, I only made about $30,000. Started it, it's terrible. Hated it, crying. I'm quitting. I'm not going to do it. Started my business with about $30,000, still did my taxes. In the meantime, in my business, I started growing, of course. When I started growing, a friend of mine told me about Yvonne. And she said, she does taxes. You need to meet Yvonne. And I was like, no. I said, how much you pay? I was like, girl, I'm not going to pay. How much you pay? And I was like, I'm not going to do it. And then I started doing real estate. And then I didn't know what I was doing. I was making all this money, second, third year. My third year, I was the #1 African-American agent in San Antonio. Yeah, making more money than I ever had. And then I go try to do my taxes. I'm like, I'm doing something wrong. I don't know exactly what I'm doing. But Yvonne took over my taxes. So she's been doing my taxes most of my real estate career.
Wow.
And I want to let you know the benefits of what she's talking about. Like, I like a tax planner. I want somebody to be able to tell me, listen, before the end of the year, you're going to need to take this much money and invest it, because she's saving me money. So I wouldn't, so it's better to have a professional that all they do is look at your numbers. Call me in the middle of the year and say, you're making too much. We're going to have to take you and we're going to have to let's go buy a car. Okay. And you're thinking, I can't, afford to buy a car, but she's showing you how you cannot afford not to buy this car. And so that's because she's going to put it in the business name. So Peaches Brown Realty Group is a business entity. I had that as an LLC because everybody tells you, go get an LLC.
Right.
So I did that, but it wasn't doing anything for me. So I have Peaches Brown Realty Group as an LLC. She also helps you build your digital footprint for your business, because if you have a digital footprint, you can get credit, go do bigger and better things. So Peaches Brown Realty Group is an LLC. It always was since I've been a real estate agent, but I was always getting paid to Nancy Brown. So when I made my first 200,000, I'm paying taxes as Nancy Brown. My house is in my name, my cars are in my name, and I'm paying all this money. So I think it was 2021. One year I was paying like $15,000, $16,000. And I called her, I was like, this is when you got to get you a professional. I'm like, it's $15,000.
They should be paying me.
She took my taxes, she redid them, and literally, not even 30 days ago, literally, I just got a check in the mail for $6,000.
Amen.
Just in the mail, just from her going back and just doing adjustments to something that somebody else did, or either I did. But one of the most positive things about it, because one of the questions she said is, what was one of the things you've learned from this tax program? So in my business, this is what I like. I get to control how much Nancy Brown makes. My name is Nancy Brown. Peaches is my nickname. So Peaches Brown Realty Group, starting this year, everything went into the business name because Trek changed the rules. So I don't know, who's the broker here? Are you the broker? You're the broker? Yes. So nice to meet you. So I'm with LPT. So with LPT, you call your broker, you ask whatever it is. But she did it all. I didn't do anything. She's the one that filed the paperwork, told me what to do so now my business gets paid to Peaches Brown Realty Group. Every commission check I receive gets paid to Peaches Brown Realty Group. I now pay Nancy Brown whatever I want her to get paid. I can control what I show on the personal side. So I can control my taxes, so she'll ask me at the first of the year, how much Nancy Brown need to make this year? Is it anything that Nancy Brown needs to do? But really there's nothing, because we're gonna put the house, and also by having your own business LLC that gets paid, you now have something you can use to go get your cars. How you gonna put a car on a business name and all I got is an LLC? There's nothing to show for it. So by going to your LLC and getting paid by the way that Trek now allows, it allows me, number one, my business gets credits because now Nancy Brown gets paid. That also allows me as an individual to still pay into Medicare. So when I get old, I can still get some Social Security if there's any left.
Right.
You see what I'm saying? But before I wasn't doing any of that. So I come to tell you, if she tells you something, you can trust it. And if you are making 6 figures plus, I know some of you are new, but once you hit 6 figures and you're doing your own taxes, or your best friend, your sister, mama, your cousin, and they're really not the professional that they should be, you are doing yourself a disservice, because you're paying more by not receiving the credit you're supposed to be than paying a friend a couple $100 to do your taxes. Allow a tax professional. She's my CPA, and now she's become a friend. She's now a business. We're now business partners. I respected her so much. She was my go-to. I send all my clients, when I get a client and there's something going on, because they don't understand, if you make 80,000, but you went and said, I got 40,000 in credits, because we're all just trying to pay the minimum.
Right.
We just want to pay the minimum to the government. We don't want to pay the government. So everybody does the same thing. So there's been tons of times, if the taxes is the reason why you can't get a house, let me call Yvonne. Let's let her review those so she can do an adjustment, because I usually tell them, and most of the time you don't really require your taxes. You don't require it, but if you're in business for yourself, most of my clients are business owners. I specialize now with dealing with business owners because of Yvonne. Because they say, hey, Peaches, I don't know what she do, but I couldn't get a house before, I send them to Yvonne. She's my best kept secret. I don't share her with nobody. I can say, hey, what you make? Okay, what we need. Then I send it to her. She can readjust it. So I'm just here to say she changed my life. Now my vehicles can be in my business name. You know what I'm saying? So when I pull up in my Rover, that's Peaches Brown Realty Group.
Yeah.
You know what I'm saying? Because it also releases the liability off of me. It also takes all of that debt off of your personal credit. And if you do have your LLCs, my personal credit is what is building Peaches Brown Realty Group credit. So the better my personal credit is, the easier it is for me to get business loans and grow my business because of it. So, and my last thing I just want to say is, it feels good when you know that there's somebody, because she'll call me. If I haven't reached out to her, one of her team members, somebody's reaching out to me to say, hey, let's get together. What's your money look like? What are we doing? You know, so now she's been doing my taxes so long, we already know, you know, what to do. But I just have to say, she just changed me to an S corp last year. I can't remember how much my taxes were gonna be before the S corp. But we did it at the end of the year. It was definitely around this time last year. She said, no, we don't have to, you done made too much, because of course I made more money then. She said, you're making too much money. We can't, you know, you're gonna be paying this $50,000 if we don't go ahead and change you. I said, okay. She changed me to an S corp. Asking me how much I paid in taxes last year. Zero.
That's what I'm talking about.
Zero.
Is it too
Well
late?
into the six figures. I paid zero in taxes. I don't know what she did. And most of my friends that I refer to her, they say, is this legal? I used to ask things like that. But, you know, no, it's just that she goes to classes, she travels. She's not telling you who she is. I'm getting ready to sit down, but this is what I can tell you. If you are a real estate agent and you're looking to kill it, and you're trying to get to six figures, if you're not already there, you're gonna get there. But when you do, but before then, get with a professional that understands your nature of your business, that can cater to your personal need of you and your family, and who can get you where you want to be. I personally like when I don't have to pay anything.
Yeah.
You know, Nancy Brown may have to pay a little something, but if the Peaches Brown Realty Group, which is where all the money funnels to, because once again, I control what I can pay Nancy Brown $5,000 a month. I can pay Nancy Brown 10,000. I can pay her 1,000, depending on what I need to show for Nancy Brown. But the more that she grows my business, the less I have to depend on Nancy Brown. So now I'm getting to the point where my next house, my current house is in my name, but my next house is going to be in the business, and it's going to be the business's house, and the business is going to pay me. And because I do have an employee, which is myself, my business also gets that credit too for having that payment at that W-2 employee. Okay. All
right, guys. Peaches will tell a story, I'll tell you that, but it's amazing, amazing. So what I want to do is open up a little Q&A, because at the end of the day, I want us to talk to each other, right? As we are running through a couple of these things, and I wanted to really come today to offer solutions. It's one thing to inform you. It's one thing to talk to you through your processes, but who's doing the work? That's the other part, right? I can give you everything. You can go and fact check what I'm saying on social or on different platforms. But if it's interesting enough to you that you want to do this for yourself and get prepared, who's actually doing it for you? So I'm into result driven. I carry myself as a committed person, aligning with my clients and just making sure that we get your goals done, because the bigger you are, the more you succeed, the bigger I can, right? I'll stand right beside you, go to every event, I'll celebrate with you, I'll cry with you, we'll figure it out, right? Because that's what we take home. So I wanted to open the floor, let you guys ask me questions, because I know after me and Peaches, that is a lot, right? Did anything that you learned today resonate a question?
Yes.
All right, come on.
And okay, so you mentioned when you form an LLC and then you switch it to an S corp.
Mhm.
Does the LLC have to be aged for a certain period of time to change that?
No,
Okay.
you can do it the same week you open your LLC.
Okay.
Yeah, so you're literally walk into it.
So if you already have the LLC, you just add the S corp, or?
When you want to change the conversions, yes, you just ask IRS. There's a format that you have to do to get IRS to give you the yes to your classification change. Yeah, absolutely. No questions? No questions? All right, we got some questions online. Maybe some questions coming in online. Get in that chat, let me know I kept your attention.
They stayed on, so I know they paid attention.
Hello, hello.
Go ahead, Evans.
Hey, yes, you definitely got my attention. I definitely liked everything that you had to share there. I'm looking to see, I'm definitely interested in finding out more as I look to grow my business and what's the best direction. Because I do think setting the course on a tax side makes it easier, it's another target to strive for. In other words, to help set the goals.
Gotcha.
So I like that.
Awesome. I'm glad you chimed in. Anyone else want to ask a question based off of anything they heard today?
Yes, we have
This
one.
Laverne,
Give me one second, Laverne. Ashley Green asks, why is S Corp better than an LLC?
Well, the S corp gives you a separate classification. As a LLC, you're literally just separating liability from you and the business. So the S corp actually gives you a separate classification and allows you to take taxation on as a corporation. So how C corps and incorporations file their taxes, you file a separate return from your personal side, and then whatever's left over just passively transfers over to you. So one, you get rid of the self-employment taxes. Two, you get better business value in growing your business as an S corp, and you get the W-2 yourself. I don't know how better that is to the fact to where you can show your income in a different light,
yeah.
right? So tying into the comment, you guys have some time to make some changes. If you have an existing LLC, I've got a couple of packages that I can talk to you about, which is one is ideal for just changing your concept. If you are an LLC and you want to change over to an S corp, get your business regulated. I'm sorry, in front of it. Get your business regulated with TREC, because again, you need doers. Giving you the information is one part, someone actually physically doing it is the other, to make sure that you can take advantage of it this year. Yes, ma'am.
Is it state only? Like, can you do state only? Cause I do business in Louisiana and Texas.
Yes, so the corporation can do cross-line. Now, are you operating in Louisiana
Yeah,
as well? Okay, so it is a state separation. So with TREC, because it's a Texas we'll have to look into the one for Louisiana. Because I don't know if Louisiana.
what,
yes, has
the
a state.
Louisiana, my commission already get paid to my LLC. I
So
just
they
don't have
already-
an LLC, I don't have an LLC for Texas.
For Texas, yes, you have to have an entity here in Texas in order to take advantage of the TREC. So what you could do is what's called a foreign LLC, which you mean, my business is headquartered in Louisiana, but I'm gonna open up an actual secondary business in Texas. So you can do a foreign LLC and then still do an S corp for the whole umbrella, because you would do one tax return
Okay.
for the business, because one LLC owns the other.
Yeah.
Oh,
nice.
Yeah,
Okay.
you can still do that. So if you've got an existing
Yeah.
business and you just need to expand a new business into the Texas territory, we can help you do that. We can also do all your applications with TREC. We do, anyone heard of FinCEN this year? FINCEN.
I've been hearing on social media though.
Yeah, so so as of last year, the federal government wants to know who owns your companies.
Yeah.
Right? So they now are making us register all of our businesses directly into what's called the BOI. Right? Beneficiary ownership interest. They want to know who owns it. Biggest issue with that was there were a lot of companies during COVID that they didn't know they were foreign. Right? Foreign ownerships. And there were a lot of money that went through with COVID and those foreign ownerships. So they decided to get a lot more regulatory, but hey, I'm here to take care of that. It's not that hard to do. We can formulate it all at one time. We do the TREC, we do your FinCEN reporting. We actually even get your classification changed with the IRS. And you actually get your TAC Cares subscription through the end of the year.
Yeah, I need that.
Yeah.
We have another question.
Oh, okay.
Laverne, you can go ahead
I'm
with the
sorry, Ms.
question.
Laverne, we left you.
Okay, no, okay, thank you. This was so good. And so I forgot I was gonna say, basically, I'm just glad I'm on here. I wish I had been in person because I'm sure there's some information that we can get. You're gonna share how to get hold of her. I do have a quick question. So do you need both the LLC and the S corp, or you can just have one?
No, if you, so the
Do you just get the S
LLC,
corp?
yeah, so the LLC is the actual entity, but the S corp is just a classification change to IRS. So it's not two different things. You're literally just saying to your business and you're saying, okay, IRS, I want you to tax me like a corporation. So we just fill out a different format to send to IRS, not to the Secretary of State, just to IRS to say, I want to be taxed. So when I do my taxes, you're gonna let me perform it on a separate schedule.
Yeah, okay.
Right, so you're just changing your conversation with IRS per se.
Okay, I heard you mention a C corp.
Okay, awesome, thank you.
CNS, okay, so an LLC, that's a single member, remember, it's only one or two owners, right? That is considered a single member LLC. You guys have an election to either do S and contain your single membership or do a C corp, which means there's shares within your company. And now there's opportunity for multiple owners, but under the C, you have to own 50%, 51% of those shares in order for Trek
Or more, yeah.
to let you
For
in.
the C
Yeah.
corp,
But
even
with
if
the-
it is multiple.
yeah.
Okay.
And the biggest difference with C is that when you do your tax return, the C pays its own taxes. Nothing transfers over to you. It stays within the business entity. Now, I will tell you, if your C owes money and is owed money for more than 3 years and so and it hasn't paid its debt, then they assign the money
Mm,
to the owners.
okay,
So that's why they need to know who the owners of that C schedule is.
and would you still be able to like W2 yourself under this?
Oh, yeah.
Is that
Yeah.
beneficial to do that?
It's
even though-
always beneficial to map out what type of income you want you to show personally.
Right,
And you're paying into your social security and Medicaid.
okay, right,
So now, as you know, as your money is coming in, you have a different way to make sure that you're still getting your social security. Out of it.
That's awesome.
yeah.
Yeah, and then so we've got another target. We got another question. I'm sorry, did I answer your question, sweetheart?
Oh, do I have a birth?
Laverne?
Yeah, thank you.
Miss Laverne, did I answer your?
Yes, ma'am, I'm sorry, I'm on the road to
Oh,
hospital.
you're
so I'm
fine,
just
you're
listening.
fine. So,
Thank you, yes, ma'am, it's good.
Good. So with the 3 packages that we have, one is gonna be basic, and that's basically, I have my own business. I just wanna convert. I wanna get my track application done and assigned before the end of this year so that I can take advantage of this in this particular quarter. And I wanna share with somebody to sit down and look at my taxes and let me review how to do what I need to do in 90 days to get the most out of it. Advanced, which is the second one, you're gonna get everything that you're getting in the basic, but you don't have a business. So, hey, I don't want a conversion. I just want an LLC. I want to get to Trek. I want to just do my basic space because my income may not be 6 figures this year, but I would love to have to start the process, right? You may not want to convert to an S or a C, right? But you can start the business, establish it, and do all the regulatory stuff that you need to do. And lastly, the gold is the big one. The gold lets you do a new business. If you need to reestablish the business, because some of us have entities that went dormant. Because we had no movement to it, right? If we need to reestablish those businesses, do all the compliances with the comptroller, just to make sure you get it active. And then we do all of your streamlined processes, and you still get a tax plan with it. So that's a little different. The tax plan is just me giving you a small intricate plan to do outside of your tax care assessments. So I always want to make sure that you guys can, depending on where you sit, if you just want to get your business in compliance you currently have, if you want to establish a new business and just don't convert, just do your regular business and get all of the regulatory with Trek and FinCEN, we can take care of that. Or if we need everything, the whole caboodle, the business, the transition, the actual replications, we can take care of that. So let's talk costs, right? So this basic cost is taking care of all your fees, because understand, there's a fee to transfer you to an S corp. There's a fee for Trek, that's taken care of within the cost. There's a fee to FinCEN reporting, and then their tax cares comes with it. Right, so I take care of all of those fees in this cost. Once you cover your costs, you don't have to worry about all of this gets done. This all is a turnaround time of about less than 15 days. All this can be done. Second, if you're more advanced and you need to actually establish your LLC, It's only an additional $300, and that covers the cost of actual state of Texas. Because Texas charges you $300 to establish your LLC. So I covered your costs to establish your LLC. You still get everything the first one got, but that's for a new. So that's the only difference there. And then last, the king caboodle. Creating the LLC, paying for the conversions, taking care of your track submissions, your fencing, and still giving you 3 months of tech years. So you're still getting the assessments, you're still getting all the conversations with me one-on-one, as well as a small plan to work on in the next 90 days to move your money efficiently so that we can get full advantage of everything. And at the end of the day, guys, I want you guys to understand that I don't know how long Trek is going to allow us to do these registered entities. We have economic changes. We may end up having a whole different Democratic or Republican team that comes in. But for now, it's open.
Yeah.
Right? And once they open it and you're there, they can't take it back. What they can do is just stop it from going forward. Right? So this is the reason why I'm pushing the envelope to get it out early, because we're some of the last people to know. Right? When things are changing and what we can do to get it done. Once it's established, it's set up, it exists right now. I don't know what it's gonna look like next year. I don't know what it's gonna look like in 2 years. Yes, sir. Mhm.
This is great information. I appreciate your time. I thank you for coming from San Antonio.
Absolutely.
The only question that I have that I think is pertinent to the group, and anything specific I'll ask you on my own, is that you said with this conversion,
Yes,
it is only for commission monies.
yes,
Now, reason why I bring that up is because the NAR settlement, a lot of the agents have had to start to piecemeal a lot of their services.
Mhm.
So as opposed to being able to just do a lot of running around for free and you get paid on the back end for commissions,
yes,
a lot of people have been piecemealing and a third party and not getting a piece of the inspection. Getting a getting a piece of staging,
yes,
you know, because you go and
yes,
getting a taste of.
yes.
Can I use those monies with this LLC, or it's gotta only be commission monies from the broker?
If I can.
And the only
speak
reason I asked that
candidly.
question, and I just give you overarching. reason
Yes,
why I
yes,
asked that
absolutely,
question
absolutely.
Is because one of the challenges I've had in this real estate space
Mhm.
is being able to show consistent income in a way where I can then qualify for business funding on the
Yes,
backside.
cash flow. We're talking.
So I don't wanna
we're
go
talking
too
cash
deep in the
flow.
woods here.
No, and you're right where you need to be.
You get what I'm
Because
saying? 'Cause I don't want
this-
to,
this-
we in a
it's an
space.
open
We in a deep
conversation.
space,
This
right?
is why the conversations have to be said.
You with me, Peaches?
Yeah. So you're.
No, because I'm just saying,
Cause this was a conversation that me
I've
and
been
Peaches
holding it for like
had.
a half an hour.
Literally an hour ago, when she decided she didn't wanna, she was gonna move her her real estate business and do some different things and take on a team.
Yeah.
We talked about the legislation that changed, because now you guys are having a fight with the people on the back end to get your 3%, right? So the ideal is, yes, the one entity has to show that, but there's another way to move around you. You can take in the money that you're getting off of, because those are outside contracts, right? Trek doesn't regulate where that money is flowing in from, right? Because it's your private entity. But in the eyes of Trek, you're basing this to your broker. And your broker is getting the W-9 with that business information. If you spun off to something different in a different cycle, that's either a separate LLC that's owned by the first LLC.
Yeah.
Right? And then you funnel all the money still in the same house.
So you saying for the $3,000, but that, because what I'm talking about is something like you were saying, this is gonna be one of the things. Because it seems like, because what you're just like is having like an umbrella court.
Mhm.
So that's why you would have to go to this gold package, because it would be
Yeah,
an entity under another entity. Because that's the main thing, is that, let's say commissions, we are all blessed enough to sell $1 million house once a quarter.
okay,
So you got your $30,000 coming every quarter,
yeah,
which puts you at 120 for the
Of
year,
course.
which is enough that somebody would need your service.
of course.
But in the midst of working with a client that's purchasing property at that price point, there's
Okay.
gonna be a lot of services they gonna demand
Of course,
that now we can piecemeal.
of course.
And
So
start
you're
getting
gonna
a piece of
basically
all the way
you're
down.
gonna sub your company.
Yes,
Right, to get that income in.
can we do it under the same name that we would establish?
Trek cannot regulate
Okay,
all incomes that come through your business. But when you set this entity up, this entity was built out to accept your commissions. Right? And if we have to funnel a DBA or another LLC and add it back in, that's fine. You can still do the same thing. You can still funnel
right, so
out
that's only
yourself.
complicated in my mind, that's not complicated.
No, it's not complicated.
Okay, in my imagination, that's a lot for me.
No, and that's why you
But I'm
have,
ignorant to the
that's why you
process,
would
right.
have a meeting.
Right,
Right, because I'm gonna facilitate it as well as a lot of people operate out of one account. Right, when you have your business, you open one business account, but you need several accounts. Right, you need an operations account, you can have a contracts account, a payroll account, a tax account. Right, you need to separate the money. And basically, it's really about how you build the contract that you come up with for the outside entities.
because I think a lot of the challenges that we at this side of the table deal with is that we always rob Peter to pay Paul. So all of the things that you have to take care of as far as licensing, fees.
Yeah.
Dues. At the end of the day, most people don't have it organized where they have funds set aside
Of
for
course.
just that part, so.
And let me tie
that's
it back
where
around to a partnership that we grabbed. So we also are partnered in the Tech Cares movement with NerdWallet. Right, so NerdWallet, we have an app, and that's one thing I haven't shared with you guys. We actually have an app that's coming out this year. And that app is gonna house all of our assessments that we do with you guys from your phone. So you'll be able to see on real time what your assessments are that me and you do.
Wow.
Right, it'll sit in the app.
Liking it.
And within the app, you'll also be able to fill out registrations for business credit. And with the conversation with NerdWallet, they are willing to allow you guys to know which credit cards are consumable for new business entities, what the credit score needs to be, what reports they pull. All of that will sit in the app as a connection, as well as you have a me, right? So with me and my team, if I know you're going after funding and you're funneling multiple, what's called a combined profit and loss, which means you got income coming from a separated entity, you have the income coming from the LLC with the commissions, all of that is combined into one P&L, right? Under one business umbrella that goes out for funding. And I will show you how to recycle money. Commission 30K, you dropped it, right?
Right.
So I'm gonna have you go and build multiple bank offerings, and you're gonna funnel money through these funnels, right? Because at the end of the day, the bank is gonna ask you for the bank statement. What's on the bank statement? Deposits and credits, right? The bank doesn't know that you took money from one business and funneled it into a different account, They're gonna take all of those accounts and they're gonna merge them together, and they're gonna say, here's your agent. You recycled that 30,000 at least 3 times. And the business owns all 3 of those bank accounts. There's multiple ways to stretch your dollar. Yes, I'm sorry, because I know you go deep.
Your question, because I've done it.
Oh, yes,
I-
so
I
nice to meet
bank
you.
accounts that are
You
all
wanna make sure.
Brown Realty
Yeah, there's no
LLC.
Gotcha, and then I, you are
To
good.
answer
So
your
nice to
question,
meet you.
so was
I'm a
she
hacker.
there?
Thank you.
And I went to this because
Yeah,
I
I'm
was to make sure that I'm doing everything right. I started calling Trek. I called Safeway. Okay, what if I'm getting the check for, because I have, you know.
I'm a new agent,
I settled
so
with
it's
you.
like,
I
I
called
like
Trek.
to, yeah, and it's like, I want to
You know what I'm
get
saying?
it.
We did that
This
short.
and just put it out.
You know what I'm saying? Sure.
So, I appreciate you. I mean, I feel like
There's a fee for that.
That's what I mean.
Yeah, I understand what you're saying, but this is what Trek told me. This is why I just wanted to address, because you asked something, I asked Trek myself, right? So in my business, I have the Christian Brown Realty LLC, but then ultimately they put it back on how did your broker want it to be. Who cares? The broker don't care.
Right.
But in my LLC, if I get a check that's outside of commission,
Right.
but it's still because of my services.
Right.
If I put it in that account, that's fine, but I have more than one Peaches Brown Realty Group LLC. So anything anybody's giving me, they're paying it, if they're gonna ACH me, they're gonna wire it to Peaches Brown Realty Group, but my secondary account for all other stuff. I do keep it one just for my commission.
So you're asking.
So it's still the
I can have the same LLC, but have different accounts.
Yeah.
Operational accounts to piece
Right.
that together.
Yeah.
So,
So, and I just keep that separate, so if I ever get audited or somebody ever want to complain, they need to pull that account, I'm gonna give them the account where nothing but my commissions go out of. The only thing that comes out of that account is what I pay to Nancy Brown. Like, say there's something I wanna get from that LLC, I'm gonna pay Nancy Brown, like, say I need $2,000.
are we
I'm
still
gonna pay
live
Nancy
online?
Brown
Shannon?
that $2,000.
Are we still live online?
No, I just want to fly
Let's
this last
do
question.
business.
No, because
But I just want-
I'm gonna get in the gray area. So, okay. And this is one fine one. Like I
We need
said,
the-
I hate doing this in a group setting because everybody's.
I mean, you
situated.
need, yeah,
And the reason why, because I've been holding this question for like 45 minutes. I ain't
Okay.
interrupted nothing.
no,
I don't
absolutely.
even know if you thought I was engaged or not, because I was on the computer, but I was like,
Yeah, I
No,
thought
but
he wasn't engaged, I was like.
shit, look, I tapped her on the humble. I was like, oh, my bad. You don't even know, you're not in my mind. You don't know what I'm thinking. But one of the things that's a trick bag, and your example was great, but the only thing about it was that she was single.
Yeah.
And fortunately and unfortunately, when it's tax time, I'm married.
Okay.
Depending on, yeah, straight up, depending on what's going on that year and how things been going. Now,
I'll be honest with you, if you guys play Russian roulette with your, you were setting yourself up for it.
right, and so and that's the trick bag of it.
Yeah.
Because, in a former life, when I was single, I used to live in Las Vegas.
Okay.
And when you live in Las Vegas, you learn the tax benefits of living in Las Vegas that differentiates Las Vegas from the rest of the world.
Uh-huh.
Until you actually live there, you don't understand the benefit of actually having that from a residential standpoint. Thing about it that's similar to Texas is there's no state income tax.
Yes.
Now, the thing about it that makes it sweet is that with the gambling that goes on,
Mm-hmm.
all the tax professionals always can work in the maximum percentage write-off for anybody through gambling losses.
Okay.
To a certain point where with all of the gambling that go on, people don't understand that you can write off the losses because they definitely gonna tax you on the wins.
Yeah, but they cap it.
Exactly. Now, that's the cap part.
Mhm.
Now, so with me knowing that,
Of course.
when I started doing, because I've only been married for 2 tax cycles,
Okay.
so
Come on,
in the
come on.
trims.
I know.
I'm gonna say that from now on.
Tax cycle.
I'm married for the
It- When I ask this question, you understand why.
I
said
got
that.
you. Okay.
Now, like you say, I did get a good advice not to play games with my filing status,
Yeah.
because people like to play them games. Oh, you meet some married people, oh, we filed together. You meet some married people, oh, we filed separate.
Yeah.
But the
yeah.
key is, once you establish that, you gotta sleep in that thing.
Yeah. Yeah. Yeah.
So that's the thing. So to make it easy,
Mm-hmm.
I say we're gonna do it jointly, keep it consistent that way. Now, the thing that I've always thought is, damn, with us taxing like this, because like you said, with the married people,
Yeah. You gotta
once
have
you
a
have a
conversation.
combined household income above 300, the taxing is ridiculous.
It's ridiculous.
It's ridiculous. Now,
Mhm.
the wife, she W-2,
Of course.
corporate, you know what I mean? We got the health, the dental, the vision, all
Yeah,
that stuff, you
yeah.
know what I'm saying? Now, the issue is that with it being W-2, they taxing us to death.
Of course.
And my whole thing with her is, we gotta figure out a way for you to be able to, on paper, donate, give away this bread
Yeah.
to a company that I own
Mm.
some kind of way and get a write-off on it on the backside, because if we just bought 100,000 lottery tickets and set them on fire,
Mm.
you feel what I'm saying? There's a write-off for that.
Mm-hmm.
Let's say they don't win, you know what I'm saying? You can just set them on fire. So my thing is that with this new tax designation that Trek is allowing,
Mm-hmm.
would there then be a way for us to take our W-2 income
Okay.
post-tax,
Okay. Post tax. Already paid
through
tax.
charitable contribution or however we gotta structure it,
Okay.
run that money back through the LLC, since they would be paying me as an employee,
Okay,
When we do our taxes jointly,
okay.
I'll be a W-2 cat just like the wife.
Yeah, so your
You
wife,
see what I'm saying?
so your
we
wife,
both
so
do
it doesn't
W2.
have to be charitable. Your wife's an investor.
Okay, there you go.
Your wife's an investor,
And that's
right?
how we was, okay, she'll be invested in the
She's an
corporation.
invest, she's an
I'm just an
investor.
employee. We get
Exactly,
to bring the tax liability down on the family.
exactly.
We'll
because-
build up the corporation on the backside.
Exactly. You build the corporation up on the backside, you're getting her
Everybody
cash
suck
flow.
that game up.
You get.
If you single, get married tomorrow. No,
If you get your cash up, yeah,
because when you said that Trek allows that now,
yeah.
before then, this wouldn't even been a play to
This
make.
wouldn't have been a conversation.
It's right, it's an
You gotta
impossible
make-
play.
You gotta make the play.
My mind work, I'm left-handed, that's why I'm a weirdo.
Come on now.
You like so?
Come on now.
Stop it, baby. Oh, baby.
Don't give me your 3,000.
No, the thing about-
Yeah, but see, I gotta go and we all rode in my truck.
No, that's true. I got all the information, you gonna set the game.
Did you get my information? Your contact?
No, we gave the QR code. No, so we gave the QR code.
So people here got calls, she
Yeah,
scared me.
Yeah, so.
So I'm gonna be a little.
I'm a sign.
And I sorry to interrupt.
You pass your call?
This is the takeaway taxes.
All right, we
I
can-
went ahead and sent the interest
Uh-huh.
form. The interest form. So if they're interested in talking to us, if we can get their information
Okay,
in the room, and then we will email them the interest form and the payment options.
so, I'm sorry, so Melanie Milton.
Oh, I'm like, wait,
Is our business
Please,
development.
please make sure I
Yeah,
get
so
on that
she-
list.
She's behind, yeah, so the QR code, if you wanna link it, you can also link the QR code. And, I'm actually even giving 20% off on tax preparation when you come in with the QR code as well. My ideal is, I want us to jump on top of this sooner than later. Right? Let's lock in. Yeah, and I wanna talk to you independently, because I know in the room, it's hard to get everything in, but I'm telling you, I'm one that's gonna follow up with you guys to make sure that we get on top of this. Why?
Start
Because-
pre-trial, okay, so, okay.
You see the interest form
There.
on the side? Yeah, start, let's see, what did she put?
Oh, I see just.
Start your journey. Mhm.
Okay, yeah.
And that'll let me sign up, okay.
Yeah.
Is
yeah.
that interest form on
Supposed
screen?
to share this, cause she probably, I don't know if this is the room, but if you want her to look at your last year taxes, she would do a free tax review to look at them and see if there was something she would have done differently. Now, if you
Okay.
want her to go back and refile, there's fees for that, but just to sit down, if you just wanna have her look at your last years, cause once you do that, she gonna be a tax girl forever. You gonna tell your best friend, I love you, girl, but I gotta.
Yeah, so once you guys fill out the interest form, let us know what you want and I'll follow up with you independently.
Okay.
Right, to make sure that we get everything locked in, because I know you guys will get home, it'll soak in. Guys online, they, the link, Mel put the link in the chat box with, online, so that they could, fill it out. Listen, I'm right here in Houston with you guys, so, I office out of Edo, in a flex space. We are a franchise firm as well, so we build tax offices with impactful tax people. Right, that's our
Well,
goal.
where is Edo? Where?
East End, you know where the
Oh, that's a-
baseball?
That's a nickname?
Yeah, it's like the neighborhood.
It's in the downtown is what it stands for.
Yeah, it's the east. I
East
mean,
end of downtown.
Oh, y'all gotta be specific, okay.
Yeah, so if you know where the Dynamo
You
plays,
Overall, 59 and
on
Midway.
59 side,
The
yeah.
other side.
The Dynamo Stadium, Astros, have you been to
Oh,
the
yeah.
Astros game? I'm right on the other side of the freeway.
We like.
On that side, from that, they park in our parking lot to walk to the
Yeah.
Astros game, that's how close we are. Right, so, again, my name is Yvonne Cobb, I really appreciate you guys, I hope you learned, some opportunities today, I hope to see you sometime in the near future. Closer than the others, let's knock this out, again, I don't know how long Trek is gonna allow this, so let's jump in it.
Get on the book.
And you guys are my first team. But I'm going to Caldwell, we're already booked for City Quest. Don't let them people be the first one. I need my people, be the first ones to jump in and get in here, because we have to be ready for whatever's coming. And you guys wanna buy houses, you wanna grow businesses, you wanna do a lot more with the commissions, and like he just announced, you guys gotta fight. a lot harder to actually make the revenue that you used to. Now, there's opportunity there. If you are able to build your business legs the way that you need to, you have a different vehicle. Let's stop being contractors and let's start being business owners. All right, guys. Thank you online. I appreciate y'all staying on abroad. I forgot to tell my story though.
Yeah.
I had a story. And that's and it's dealing with Larry Brooks.
Oh, talk to the camera right there.
Larry Brooks. He knows who I am. His grandmother was our cool cup lady
Oh,
on our street for years. Larry, his brother Clarence, they all grew up I'm a little older, but they were all younger than me. But yeah, we all went to the same schools. I've seen his growth and I appreciate his business. And when my marketing team told me I was coming here first, I was excited. I was hoping to see him, but that's fine. I'll see him at a different time.
yeah, you just missed him before you came.
Oh, he was here this morning.
Yeah.
Yeah.
He's an early bird.
Yeah, he probably knows me as Hollis. I've decided to start wearing my maiden name, my married name. Nonetheless, thank you guys online. I appreciate you. Hope to see you guys soon.
Yes, thank you guys
Thank
for
you, guys.
joining. Thank you,
Let me ask you
Evelyn.
one
Thank you,
question.
Takeaway Text. You guys missed out on some good food. This is tiramisu.
Tiramisu.
Yeah, you can actually have some tiramisu.
Thank you.
Thank you. Y'all have a good one.
Wait, there's still some more?
Yeah, I'm
What'd you say?
There's still some more tiramisu? I'll be on my way.
As long
Yeah.
as you can pronounce it.
Limited time only.
What is the pros?
Huh?
Limited time only.
Oh, I know. I was just kidding.
But,
But
Decided to go with the
in the chat,
was
what's
your-
that in the chat?
he decided for me.
The interest
Oh,
form,
let me give you my story. So.
if you would like a phone call from Miss Yvonne,
I do.
go ahead and fill that link out before I close it.
And you know, I
Hold
mean.
on. Just click on it.
A lot of times
Yeah.
you license yourself.
All right.
in
I
your
did.
in
Got
your,
it.
Your maiden name, you know, when you were.
Hey,
that
Shay.
person Before you got
Yeah,
married.
yes, ma'am.
Shay,
Wasn't really.
I'm not